How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was recorded on July 30th, 2019. Here is a snapshot of the positions held as of that date. And so now we will take a look at gold and the positions that the institutions have currently or as of July 30th. So what do we see here? We see that longs are aggressive, total size is aggressive, and long exposures at 84% with a clear long bias based on the coloration of the cells. We see net positions increase from 251 to 254, which is a clear sign that they are aggressively long. And this past week we see an increase from 311 to 312. Not too much, but an increase. And that came as price was consolidating right here. Now, as I've mentioned before, with long positions so aggressive, we would tend to think that there's going to be some kind of a pullback. But, you know, we can still see price head higher. I mean, it's possible that longs become even more aggressive with room for a push to the upside. But I would be hesitant to start accumulating a long position up at these highs because we've already moved so aggressively. If you do start to accumulate along at these highs, you have to be very careful with your stop loss because it can just turn on a dime. Okay, we got to be careful with that, especially when you look at the pound, the euro, and we see that they have supply that price has moved up into. We could see them reverse, which would cause some pressure to gold to drop as the dollar would rally from its demand. Okay, so very aggressive, bias is long, but got to be careful when adding long positions. Next we have oil. So oil was consolidating here, and we see that they increased longs from 537 to 540, but they also increased shorts again from 140 to 152. So I want you to pay attention to what we're seeing with the shorts here. Okay, I told you for quite some time we've been profit taking on long positions. That's what they have been focusing on. But I've also said that you got to be careful to watch them start to accumulate a short position because we're expecting price to drop, right? But it's not going to be all because of profit taking on longs. It's also got to be because of adding shorts, and that's what we're starting to see here. Massive profit taking on longs here, and then now not so much, but the focus is now shifting to accumulating a short position. So be interesting to see how this plays out. I am expecting to see price go down, and it would be mainly because of short positions being added. So starting to see something be created in those terms. Now we have the dollar. Dollar rallied up into weekly supply, increased longs from 42 to 49,000. They also increased shorts. Interesting. Why are they increasing shorts? Well, as I mentioned on Twitter, I said longs, retail longs are going to get caught on the wrong side because we're rallying right into supply, which is exactly what took place. And now I said from that supply we're going to see reaction to the downside, which is currently taking place. And so those adding shorts would make sense. If you thought price was going to be dropping, you'd want to add some shorts. Now we take a look at the sentiment. We can see that it's becoming less bullish, all right, more into the neutral territory now, which makes sense because of this supply that we're hitting. So what is going to take place now? Well, it's dropping towards demand, and we'd expect price to start heading back upwards from that demand zone. A bit difficult to read this chart because that weekly supply is nested in higher time frame supply, so we could see a bigger drop form, but so far it looks like we're going to be getting a push higher. Okay, now we go to the Aussie. So shorts are the aggressor, all right, and we can see price was dropping, so they added shorts from 77 to 88. They also added a little bit of longs, but not too much. Total size leaves room for more to be added. we're basically short biased. We've been short biased for quite some time, expecting price to continue lower, and so far everything is playing out as we have been expecting. US CAD, this one here, we see longs increase and we see shorts decrease, and that came as price was rallying up here. So it makes sense what we're seeing. Now, are they going to be building a bigger short position, or were these shorts just helping to cause price to drop into demand? I'm slightly biased to a bigger move to the upside simply because of market dynamics and the zones that we're responding from. So I think all these shorts were just to get price down into that demand, and then we'll start to accumulate. We'll start to see them accumulate a long position again alongside with the dollar. US Swiss franc. With this one, we have a lot of supply structures up here that we're responding to that's causing a roadblock. You take a look here, very cooled off, both longs and shorts for quite some time. Now we see an increase in longs, but that came as price was rallying up, so there would have to be some longs. Look at the coloration, neutral, which tells us be careful taking positions on this pair right now because of the fact that we're in more of a neutral bias right now. Okay, so I am expecting more upside eventually, but a lot of obstacles need to be removed before that was to ever take place. Then we go over to the euro. We see them increasing longs, but the big move was an increase in shorts from 212 to 229. That came as price dropped right into demand. So price dropped right into demand, and now we're seeing that push to the upside. Just like the dollar rallied up into supply, and then we see a response from that supply to the downside, we're seeing the opposite here. Expecting more downside to come in the near future, and just need some obstacles to be taken out first before that takes place. But we have some good supply that could help facilitate that move. Pound. Big increase in shorts, 110 to 131, and that came as price was dropping right here. Price came down into some demand, just like the euro and just like some other currency pairs coming into higher time frame zones. So we have been expecting a push to the downside, and that's what we're getting, and we're seeing confirmation of that with the institutions increasing their short positions, and 76% geared to the short side, 172 total positions. Things are looking really good for the continued move. US dollar Japanese yen, we see longs close, shorts increase. That came as price was rallying right before the drop. And why did we get the drop? Well, because we know higher time frame forces are pushing down, so price will want to continue lower. Bias is becoming bearish. So out of the bullishness into neutral, and now starting to become more bearish. So everything is looking aligned with our analysis. Kiwi, we got that push to the downside because higher time frame forces are pushing to the downside, and we see they used to be very aggressive with their shorts. They took profits, causing price to move up, and we should start to see them reaccumulate those short positions again. So again, everything's in line with the analysis, and we are expecting a bigger push lower to come. Alright, ladies and gents, that's your CFTC report for the data submitted July 30th, 2019. If you have any questions, visit www.whiteoakfx.com. Thanks, and we'll see you around.